The bond market is the foundation of the global financialized economy, and it is crashing after many years of abuse.
Max Keiser forecasting an impending market crash. He emphasizes the pivotal role that Bitcoin and other cryptocurrencies will play in the upcoming months, attributing this situation to the inflation of fiat currency on a global scale, not limited to the United States. Keiser anticipates a harsh awakening for the market and asserts that Bitcoin will emerge as the victor leading up to the 2024 halving event. This, he predicts, will trigger a significant surge in the crypto market. Investors and crypto analysts align with Keiser's perspective, cautioning against a subsequent sell-off following a substantial increase in value. Having long warned of the collapse of fiat currencies, Keiser remains steadfast in his bullish stance on Bitcoin as a superior store of value. The deteriorating trust in Wall Street pricing has started to manifest negative repercussions among investors. In the upcoming interview, Max Keiser delves into his predictions regarding the market collapse and its implications for Bitcoin in the coming months.
The Bank of England is the source of all fiat money nightmares going back to the 1690s. And they are the mother river, the mother source of all of the fiat money catastrophes that we've had. And it's kind of like the Ethereum of fiat money, right? Ethereum is the source of all fiat, of all crypto, of all altcoin nightmares, and the Bank of England is kind of the source of all the troubles in the fiat money world.
Well, first I'll show everybody in the audience just so you could see the chart, you could see the carnage, you could see the plunge, and see that it was historic. In modern records, this does not exist. Even when George Soros broke the Bank of England, it didn't drop like this. And here you see the plunging pound on coming into Monday morning as markets were opening. And of course, the thing about him burning Bank of England like that is that stiff upper-lipped, academic, sort of elitist thing that voters continuously reject, whether it's in Brexit, whether it's MAGA, whether it's Italy, whether it's the total support here for Najib Bukele's re-election campaign. What they're saying is they're sick of these people who have ruled over the world, the elite institutions, the academics, the think tanks, all the media that presided over this disaster that left us so fragile. The plunging pound like that is a sign of fragility. It's a sign that it's all a mirage and it's all could disappear like that. So there was another tweet that happened, and that was with Saifedean Ammous, who was pointing out that Paul Krugman, of course, Nobel economist, right? The sort of guy we're told over and over to listen to him because he's an expert, even though we, the people, could point to when he got it horribly, embarrassingly wrong about the internet, when he said the internet would just be a fad, it would be no more important than the facts. And then Saifedean Ammous, he tweeted a reminder from just 2 days before the pound plunged. Just 2 days before, he tweeted, quoting Paul Krugman, he said, "I did invent the academic field." And he was referring to Paul Krugman's tweet. But back to sterling, pound sterling, the British pound, I'm supposed to know something about currency crisis. I did invent the academic field. And as far as I know, there are two ways a country with a floating exchange rate can have a currency crisis, neither of which seems to apply to the UK. So the experts said what happened coming into the beginning of this week, yesterday, Monday morning, was not supposed to happen because they could print money as they wish.
Right. This is a recurring theme. Paul Krugman we've visited his career many times. He's been dead wrong, always. He espouses a Keynesian economics model that has as much a failure as communism or socialism has been a failure. And all the academics, the Steve Hanke, I think his name is, he's been spouting falsehoods now for years. And why does this all happen? Why do we have a government and a central bank that seems to relish being wrong and causing untold misery? Because whenever they make a mistake, they can print money to cover it. Everybody else who's not printing money for themselves has to work for a living. And if you work and you make a living and you have a family, and then you watch politicians, you watch Paul Krugman, you watch Steve Hanke, you watch the Jay Powell, you watch the Bank of England. I mean, England's not even, it's not even anywhere near a democracy. It's an outright autocratic supreme ruled by a monarch. They just print money That's all they do. When they make a mistake, they print money to cover the mistake. And that's what Bitcoin fixes.
Kaiser emphasizes that collapses distort investor timelines amid extreme volatility, where cryptocurrency prices can skyrocket and crash within mere months. The recent surge in international conflicts has sustained global market volatility, creating an atmosphere of heightened uncertainty. In Kaiser's view, we are teetering on the edge of a looming and comprehensive financial collapse, underscoring the precarious state of the current economic landscape.
The British pound, which started, 100 years ago, is now accelerating in this parabolic end stage. But of course, we've seen the change of monarchy from Queen Elizabeth to King Charles. We've seen the shift of power from the premiership, from the prime minister, from Boris Johnson to Liz Truss. But there's been a regime change, as it's called by Mohamed Al-Arian, the former head of PIMCO, which is a $1 trillion bond fund. He's calling the moves in the treasury market disorderly. But first, I want to show you some of the data of just how disorderly this has been, because this has been a recurring theme on all of our content going back nearly 20 years at this point, is everybody has called the death of the bond market. The bond market has been in a raging bull market for 40-something years, and everybody has called that this mother of all bubbles was going to pop. They said it 15 years ago, 12 years ago, 11 years ago, 9 years ago. They keep calling it. And of course, that the bond apocalypse is going to come, and it never came. Well, it looks like it's here now. And this is a chart. First, we're going to look at 46 years of data. Bond market carnage update. And this was from a week ago before it even got worse. And the total return of the Bloomberg Global Aggregate Index made a new low for the year today. It is now down 16.93% year to date. How stunning is this? The S&P 500, which is having an extraordinarily bad year, is down 17.5% year to date. So you can see the 46 years of lines there. We're way worse right now than it was there.
The bond market is the foundation of the global financialized economy, and it is crashing after many years of abuse.
Both Wall Street and Silicon Valley diverged from the strategies of early Bitcoin investors in 2017, as Bitcoin experiences a 38% decline. The trajectory of Bitcoin in the next few months will be pivotal in determining its rebound. Meanwhile, some experts foresee a bottom price of $15,000 for Bitcoin, anticipating a recovery from the recent downturn since its peak at $30,000 in June. If this projection materializes, it could exacerbate the challenges faced by Bitcoin and the broader cryptocurrency market, which has already witnessed a loss of around $500 billion in the past month. Despite prevailing uncertainties, many anticipate Bitcoin's resilience in surviving this cycle, drawing parallels to the dot-com bubble of the early 2000s. While major cryptocurrencies spend most of their time in the red, ongoing investor concerns about inflation intensify as central banks tighten monetary policies. Share your thoughts on Max Kaiser's Bitcoin prediction and the unfolding banking crisis by commenting below. For more daily dose crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.